Technical tax practitioner.
Okay. All right. Hello, everybody. I'm Steytler from Remax Panache, and today I have got one of my very special colleagues, Lisa Steytler du Plessis, who is also an agent of Remax Panache. However, today I've asked her to please join us, as she is a technical
tax practitioner.
Technical tax practitioner. And a couple of months back, somebody had asked me about tax and property, etc. So I said to Lisa the other day when I phoned her, I said, no disrespect to the accountants out there, but you're all very dull and boring, and you wouldn't have really been very exciting. Where Lisa, as you can tell, doesn't stop laughing. So I did say to her 5 minutes, and she said 10. So very sorry, we will shorten it all later, but in general, the basic questions this morning. So Lisa, just tell me a little bit about what a technical tax practitioner does.
So a technical tax practitioner is different to an accountant in that we have a diploma rather than a varsity degree.
Okay.
So I did my studies through KIP Accounting, and I got my NQ Field 5, which enables you to become a technical tax practitioner.
Okay. And then you help people with taxes. I know you've been amazing with many of the agents at the office, but also people out there in general with their general taxes.
Yeah.
And you do more for employed people as opposed to self-employed, or do you do both?
I prefer to do people on commission-based or with travel allowances, because obviously that's my specialty.
Okay.
Because there's a lot more things that you can claim, and a lot of people don't know about it.
Okay.
So because I'm in the industry and because I know what we can claim, I've made it my niche market.
Very nice. Okay. All right. So then, being a commission-only earner, and then obviously we have our buyers who are looking at doing bonds, etc., etc., and there's Plessis always asks for an RP5 or an RTA 34 or all these different things that people out there need.
Yes.
Please, can you just define or explain to me very briefly what is an RP5 and how does that affect us?
So an RP5 basically has the summary of your income and how your package is split up. In other words, a car allowance, you get a petrol allowance, you get a cell phone allowance, and you get a basic salary plus maybe commission. And on the end of all of that, it tells you what you've earned during the financial year, which generally runs 1 March to the end of Feb.
Okay, so that's where the benefit comes in, I suppose, is that if you're getting a basic salary and the commission is on top of it, it gives you the total for the year.
Yes.
So it gives an average out for the bank for the bond approval.
Yes.
Okay.
That's why I ask for 6 months bank statements and 6 pay slips so they can check your average for themselves.
Okay, okay. All right.
Because commission, when you're on commission, they only use a portion of your commission for your bond app. So they don't take it as a standard income. So they might use 50% of your commission as income. As opposed to 100%.
Okay, but then that's obviously where that RP5 comes in. Okay. And then, so for somebody that is self-employed, what is the tax form then?
You need to have an audited set of financials for 2 years.
Okay.
Being a technical tax practitioner, I don't do companies. I don't do financial. I can't do companies. I'm not qualified enough. So I don't do audited financials. Okay. Only a chartered accountant can do that for you.
All right.
So if you own your own business, you need 2 years of audited financials and maybe even a letter from your accountant stating your monthly income on average. And you would need 6 months pay slips, 6 months pay slips and bank statements to prove it's constant.
Okay, so what is the RTA 34 form then?
So the RTA 34 is what you get when you submit your tax return.
Oh, and that's the same thing?
No. Oh. So at the end of every financial year, between March and May, companies like Old Mutual, Remax Panache, all companies where you get income from, banks with interest, would submit to SARS their RT 3Bs.
Oh, 3B. Oh, okay.
Okay, now
whatever that is.
Showing you.
Okay,
that shows you what your income is, what your interest is, what your whatever. So, everybody gets an opportunity to upload that to SARS. That's why when you go online to do your return, you'll see the interest is already on there because your third party, being Remax or the bank, has uploaded their RT3B to the system along with your RP5 and any.
Because I know Plessis sometimes asks for all of those
Yes.
forms in the background
So
as well for self-employed people.
When you do your tax return,
Yes.
it spits out an RT.
Okay.
Yeah.
One of those. Okay, so that's that you've actually filed your tax return.
Once you filed an RTA 34 is your receipt to say, yes, I've submitted
so that
my
you
return.
are actually, because on our sale agreements, as you know, there's actually a thing that everybody's tax is up to date,
Yes.
et cetera. So that's obviously
And
where
that will come in.
comes in.
Yeah.
Yes. Okay, perfect. Thank you. Okay. So one of the questions as well, I love it when somebody actually gives me the questions already with all her answers, and I just summarize it into like 5 short questions. But anyway, she's super efficient. That's why I love her so much. So with regards to property and rentals, because we have a lot of investment buyers out there, all people are renting out their granny flat and they're living on the property.
Yes.
So there's a rental income derived. So what happens in that instance for property owners?
So when you go onto the SARS portal, there's a separate section for property rental income. Okay. So it's not just where you go and lump one number into the system. There's different portals for each section, and there's a section for property. So the interesting thing about this is that if you have a lease agreement and it says the rent, for example, is 10,000 Rand a month, it's 120,000 Rand per annum, but now your tenant hits the skids and he says, I'm so sorry, I can only give you 5 grand a month for the next 3 months because I've been retrenched or whatever.
Yes.
SARS don't care about that. They will still tax you on the 120,
on the
full rental that is in the lease agreement.
Oh, wow.
So they say at law that is a legal agreement and that is what you're supposed to be paying, and so that is what you will be taxed on.
So even if they don't pay and they stop paying for the end of the lease, you will still have that incorporated into your tax
because it's in a legal binding document.
Oh,
so you have to declare it. And I've had it in the past where we've declared income off a bank statement and they've said during COVID, actually. So a lot of people didn't pay their rent during COVID.
Of course.
And so I came back on every occasion and said, sorry, we can't allow this. We need to have the lease agreement. You said you were going to get 120 grand. You will pay tax on that. The rest you can deal with your tenant.
Oh, wow.
That's the negative of that.
Okay, so then, so say somebody's got their normal salary that they earn every month, etc., plus their commissions, and they get their RP5, and then they're still then getting their 120,000 Rand a year.
Okay, so we declare that.
We declare that.
But then again,
it pushes their tax bracket up.
Yes, but you're allowed a deduction against that.
Okay.
Because obviously you're paying insurance on the property, you're paying rates and taxes, electricity, insurance on it, you're paying for repairs and maintenance.
Yes.
So SARS allow you rates, levies, deductions. So they allow you to say, I spent X amount on interest on my home loan, I spent X amount on utilities, I spent X amount on repairs.
Okay.
They deduct all of that, reduce your income to say now maybe 80,000.
All right.
And then that gets added to your income.
So technically you're taxed on the profit side of
Correct.
it. Okay. All right.
Yeah.
And then, so just going back to the pay as you earn, because because Torrance just started working this last year, so I've got to help him with stuff. It was so long ago that I forgot everything as well. What is the income tax threshold for pay as you earn? I mean,
so it varies year to year, every year. So last year it was 87,300.
Okay.
This year it'll probably go to about 93.
All right.
So before you start actually paying taxes. But even if you earn over that threshold, okay, so say you earn 120,000, SARS allow you a primary deduction on your tax. I think it was 13,000 and something. I'm sure warned me about this. I didn't.
I know this is the one question I was going to throw in.
So when they do your calculation at the end and they say, okay, now you owe us 22,000 Rand tax.
Yeah.
But because you've got an exemption up to that 83,000 or whatever it is, we will give you a rebate on your tax of say 14,000 something.
Okay.
So then you only pay the difference.
So it's like transfer duties, etc. So there's a tax threshold as well for
yes.
as you earn.
And you get primary, secondary, and tertiary rebates. So if you're under 65, you get the primary. Okay. Between 65 and 75, you get the primary and the secondary. And if you're really old, over 75, you get the full 3 of them all added together, and that becomes the tax reduction.
I had to take a sip of coffee there because I was about to say something, and I thought, no, best I don't.
I've still got a few years to go before I get there. I'm still looking forward to primary 2.
Stop it now.
Oh, gosh.
Okay, so the other question that you did suggest I ask, which I was going to ask anyway, this is our last one, because we try and keep it brief here. If anybody's got any questions in between, please just pop them through. Otherwise, you can always email them and WhatsApp them to us later, and I'll get Lisa to answer them. But the last question that I have for you is about capital gains tax.
So capital gains is a very, very wide
for
field.
anyone in our property market. So let's just do a generic, basic.
I knew you were going to go there.
Yeah, so somebody, because people always say, oh, I've got capital gains on my home. But if it's a primary home,
okay. So
what happens on their primary home?
So capital gains on property came into effect on the 1st of October 2021. So 2001, sorry. 2001. So basically what you need to do is you need to find the base cost of that property on that date.
Yes.
And we can do that by going into CMA or property info or whatever and pull a CMA between the 1st of October 2001 and the 1st of October 2002. It'll pull up property values in the area.
Okay.
And we know we've more or less got a base cost.
Yes.
Because you could have been living in that house 10 years prior.
Yes. Okay.
So then we say, okay, it was worth $1 million, just because my brain's not on yet. At that time.
Have a sip of your coffee and it'll switch off.
So at that time, in 2001, 1st of October, your property was worth $1 million, and now you sell it for $6 million.
Yes.
Okay. So now
That's 5 million profit.
that's 5 million profit, but you get a 2 million exclusion
Okay.
on your primary residence.
Is it 2?
2 million.
2. Okay.
Okay. So then immediately whack off 2 million, and now you've got 3 million profits. But now you added on a bathroom, you've added on, maybe you've put a pool in.
All right.
And so over the period of time, whatever it's cost you, they call it, it's improvements of a capital nature.
Okay.
So those things are deductible against your capital gain.
All right.
So say you've spent another $1 million, now we're down to 2 million.
Okay.
And then that 2 million is added to your income, and it is on that you get taxed.
But that's
But if
obviously
you're married, you split that $1 million each.
okay. Okay. But what if it's only in one person's name?
Then it's the 2 million exclusion, and then there's annually, in addition to that 2 million. So say, for example, you sell your property in this tax year.
Yes.
And you get your primary reduction because of your primary residence of 2 million. And when you declare that income, and you've sold some shares maybe as well, you get an additional 40,000 Rand per annum per transaction.
Okay.
So whether you've sold a property or you've sold shares or whatever you've done, you will automatically every year get a 40,000 Rand capital gains reduction.
Okay.
Okay. But if you sell your property in that tax year, you're entitled to your 2 million because it's your primary residence, and an additional 40,000 reduction on capital gain for anything else. Because a lot of people have got shares, and then you know how your broker will play with your shares on the stock exchange.
Okay. So essentially capital gains is really only a problem for somebody that's owned their home for a really long period of time, unless they've bought something at the 1 million, 2 million here in Durban North, for example, spent maybe 2 million fixing it up, and then they do sell it at 6 million.
So lately we've been having a lot of elderly people selling their homes.
Yes.
Because
so
now
they're going to have the capital gains.
They do have huge problems.
Okay.
Because some of them paid maybe like 450,000.
Oh wow.
But again, it depends how much money you've spent.
Based on the house.
Because if you've upgraded it and you've got to keep those receipts, because you've got to prove to SARS.
Okay, so you actually should be having a separate home file for all of your home improvements, etc., etc. So even if you think you're going to only be selling your house in 5 years' time and you're not going to be there forever, just rather have that file with every single receipt separate to your normal tax.
I did that with Dirk.
Okay.
When he added on a whole new wing.
Yes.
So he kept every receipt, and he paid almost zero capital gains.
Oh wow. Okay.
Because he kept every receipt, he added on a whole new wing, a bedroom, a bathroom, he put in a pool.
Yes.
So all those costs actually reduce it. And also with your rental properties, it's a similar thing. You've got to keep all those receipts. You've got to keep everything.
Okay. All right.
And the interesting thing about when you're selling your rental property, say you bought a flat on the Brea and you're renting it out, when you come to sell it, you can actually claim back your transfer costs, etc. When you to reduce your capital gains.
But obviously you've got the 2 million buffer anyway.
Not with the rental
not
property.
with the rental property. Oh, okay. So anything that you've then
so at the time of selling a rental property, sorry, I threw you a curveball there.
No, that's fine. I love that.
The rental property, it works differently in that you can't claim the bathroom you did annually. So say I put a new bathroom in 2 years ago, that is capital nature, so you can't claim that annually. Okay. But when you sell, you can claim for the bathroom, you can claim for the new tiles, you can claim for your transfer fees and stuff.
Okay. So any of the investment properties, as we were saying just now, with investment properties, you have to declare the rental portion anyway for tax purposes, but that is separately to capital gains. So again, have a separate file for everything that you spend, because you are going to have capital gains on an investment property other than your primary residence.
Yeah.
Wow.
And that's the end of that.
Anything else that you want to just throw in there for us this morning that I might learn?
I don't know. What did you learn
and that
today?
Everybody else might learn. Any questions there?
I don't know.
I'm just going to have a look. I think I've missed one further there. I can't read it.
I think we've covered. What have we covered?
We've covered RP5s, RTA34s, or RT3BCs, as you corrected me. Self-employed, rental incomes, the pay-as-you-earn thresholds, which was the curveball, and then capital gains. So I think we've done pretty much the basics of
capital gains
tax.
is a huge portal. So there's a lot of things. So you can't even scratch the surface really.
No,
it's different for shares in a share block company, for example, like the
yes.
Although it still applies. If you have a property that you live in for 10 years, but you've rented it out for 5, you can only claim 50% of that 2 million reduction.
Okay,
so there's a whole, it's a big thing.
So you have a seriously fun job. Apart from property, you've got all of this stuff that you go
when
on
someone comes to my office and
tax.
says, please tell me about capital gains, I go, okay.
Wow. Okay. So
Mommy.
And I suppose we do have so many people with investment property, so it is somewhat even a primary residence. So it is something that is vitally important.
It certainly is.
So do you have something beautifully typed up like you did for me for capital gains?
I can get you
we can all hand it out to people.
I've got a very big tax Bible.
Oh, that's wonderful. But thank you so much.
I can do that if you like. I
think it would be amazing if we could just give something to people and just pop it out there and put your details on, so they can come to you as well for any of their tax queries and just especially Tora, I can send them your way. First tax, first tax year.
When I start my returns, you can come help.
Oh yeah, exactly. All right, perfect. But thank you very much, everybody, for joining, and I will see you next Thursday at 8:30. Oh, this morning we are at the Fat Frog Kitchen in Glenashi, just across the road from our office in Newport Avenue. They've just moved across from Windermere, and pop in and you can collect some beautiful, delicious frozen meals and take them home, and obviously just general teas and cakes. I'm eyeing out the carrot cake there, so I might be having a piece later in the day. See you guys next Thursday. Send me questions in between. Thanks. Bye.